The average self-employed worker in the United States overpays income tax by about $2,000 to $4,000 a year. Not because the IRS is wrong, but because the freelancer never claimed deductions they were entitled to. According to a 2024 NACE survey, more than 90% of solo earners leave write-offs on the table. Today you stop being one of them. Before we hit the deductions, one rule sets the foundation. For an expense to be deductible on Schedule C, the IRS requires three things, spelled out in Publication 535. First, the cost has to be ordinary and necessary for your trade. Second, you need a paper trail, a receipt, an invoice, or a bank record. Third, the amount has to be reasonable for the work you do. Miss any of those three pieces and an auditor can kick the deduction out years later, with penalties on top. A photo of a coffee receipt is not a substitute for a real invoice with your name and the vendor's tax ID. UK readers, HMRC asks for the same paper trail when you file your self-assessment. Quarterly estimated tax filers, the Form 1040 ES math is only as good as the records behind it. Deduction number 1, the home office. If you work from a dedicated space at home, IRS Publication 587 lets you deduct a percentage of utilities, internet, rent, and mortgage interest. The simple method is $5 per square foot, capped at 300 square feet, so $1,500 a year with no extra paperwork. The actual expense method takes more work but usually pays double or triple. Here is a real example. Your apartment is 1,000 square feet and your office takes 200. That is 20%. If your utilities and internet run $200 a month, 20% of that, $40, is deductible. Stretch that across 12 months and you have $480 off your taxable income just for the corner you already used to work. Deduction 2, your phone bill. If you use your cell for client calls, write off the business percentage. The IRS does not give a fixed percentage, you have to justify it. Cleanest approach is a second SIM or a virtual line. If you only have one phone, a written log for one typical month sets the percentage you apply for the year. Most CPAs comfortable with one-line freelancers will defend a 50% business use claim, sometimes 70%. Just be ready to back it up if the IRS asks. With the average U.S. wireless bill sitting around $85 a month per Consumer Reports 2025, 50% is over $500 a year staying in your pocket. Small habit, real money. Deduction 3, your vehicle. This one trips people up. The standard mileage rate for 2026 is 67 cents per business mile, set by the IRS each January. The actual expense method lets you deduct gas, insurance, repairs, depreciation. You pick one method the first year, and you cannot keep flipping between them on a leased car. If you do field work, sales, deliveries, or client visits, the mileage stacks up fast. A real estate agent driving 15,000 business miles a year claims roughly $10,000 in deduction at the 67-cent rate. The catch, you need a contemporaneous mileage log. Apps like MileIQ or Stride keep it clean. No log, the IRS will throw the whole thing out in an audit. Deduction 4, business meals. Per IRS Publication 463, 50% of meals with clients or while traveling overnight for work is deductible. The food has to be ordinary, not lavish, and you need to note who was there and what was discussed on the receipt. The 100% meal deduction from 2021 and 2022 is gone, so do not let an old blog post mislead you. Pay with a card, never cash, and grab the itemized receipt, not just the credit slip. If you eat with a client twice a week at $50 a head, that is roughly $2,600 in deductible expense and a real tax saving in the $400 range for most filers. Track it as you go, not in April when memory is gone. Deduction 5, professional development. Courses, conferences, books, and online subscriptions tied to your work are fully deductible per Publication 535. That covers Coursera, Udemy, industry conferences, and yes, the books on your shelf you bought for actual reference. UK Freelancers, HMRC has the same rule for training that maintains existing skills, though new skill training is trickier. Here is something most people miss. Software you use for work, your Adobe Creative Cloud, your Notion, your Figma, your accounting tools like QuickBooks or Wave, all deductible. Even the AI subscription you use to draft client emails. Save the email receipts in a folder so you can reconcile them at the end of the year without digging through inboxes. Deduction 6. Business insurance. Liability insurance, errors and omissions, cyber liability, all deductible on Schedule C line 15. Health insurance premiums for a self-employed person come out as an above-the-line deduction on Schedule 1, not Schedule C, but they still reduce taxable income. The self-employed health insurance deduction is in IRC Section 162L. Crunch the numbers. A freelancer paying $800 a month for a marketplace health plan moves $9,600 from taxable to non-taxable income. At a 22% marginal bracket, that is $2,100 saved in federal tax alone, before state. Add liability cover at $50 a month and the math keeps stacking. Deduction 7. Dues and subscriptions. Professional memberships, trade groups, and journals tied to your work go on Schedule C. American Bar Association dues for a lawyer, an Institute of Management Accountants membership for a CPA, a SAG-AFTRA membership for an actor. The hobbyist version of these does not count. Direct ties to your trade is the test the IRS applies. Deduction 8. Depreciation. When you buy equipment over a few $100s, like a laptop, camera, or office furniture, you usually spread the deduction across its useful life under MACRS rules in IRS Publication 946. A computer is 5 years, office furniture is 7. There is a Section 179 election that lets you write off most equipment in year 1, capped at $1,200,000 for 2026. Here is the move pros use. If you have a high income year, take Section 179 immediately and crush your tax bill. If your income is low, spread the depreciation to offset a future high earning year. Talk this through with a CPA before you swipe the card on a $1,500 laptop in late December. Timing the purchase changes the whole picture. Deduction 9. Business interest and bank fees. Interest on a business credit card or loan, bank fees on your business checking, and merchant processing fees from Stripe, Square, or PayPal all flow into Schedule C. The Bureau of Labor Statistics tracks small business banking costs averaging $240 a year, low six figures over a career if you never write them off. Most freelancers run everything through one personal account. That is the single biggest organizational mistake I see. Open a separate business checking, route all client payments and business spending through it, and your bookkeeping problem solves itself. Banks like Mercury, Novo, and Bluevine offer no-fee business accounts with no minimums. There is no good reason to mix the two anymore. Deduction 10. The Qualified Business Income Deduction. This is the big one most people skip. Per IRC Section 199A, most self-employed filers can deduct up to 20% of qualified business income on Form 8995. Phaseouts kick in around $232,000 single, $464,000 married for 2026, but most freelancers fall well below that. An example. Your net profit on Schedule C is $60,000. 20% of that is $12,000 knocked off your taxable income before you even hit a tax bracket. At a 22% bracket, that is $2,600 in real tax savings. The QBI deduction does not reduce self-employment tax, only income tax, so do not confuse the two when you forecast. Pulling it together. A freelancer earning $60,000 who claims home office, mileage, health insurance, and QBI properly can drop their taxable income by $15,000 to $20,000. At combined federal, state, and self-employment rates around 35%, that is $5,000 to $7,000 staying in their account every year. Compound that over a decade and we are talking real wealth. One last move that pays off. Review your last 3 returns. The IRS lets you amend with Form 1040X within 3 years of filing if you miss deductions. Yes, you can get refunds for prior years, with interest. UK filers, you have 4 years from the end of the tax year to amend a self-assessment under HMRC overpayment relief rules. Money is sitting there if you forgot to claim it. Subscribe to Finanzas Clara and hit the bell. What's coming next week? The freelancer mistake that cost one Reddit user $11,000 in a single audit, plus the one piece of paper that would have saved him. Drop a comment with the deduction you want me to break down next, and I will pin the best ones at the top.